Hey guys, it's Nolan from Trade and Train. We hope you are really well and staying safe. So this is the first in a series of videos called Back to Basics. And the subject we've chosen for the first video, as you can see, is trends. So what is a trend? Well, in trading, we have uptrends and we have downtrends. And definition of an uptrend is when price makes higher highs and higher lows. And you can see in the slide here, each time price makes a higher high and also makes a higher low as it gradually on average moves to the upside and that price gets higher. Also note that the movement in line with the trend is called an impulse, and the movement against the trend is called a correction. Also take note that the impulses are longer than the corrections, and that is typical of a trend. So if you were a trend trader and you wanted to be buying this particular chart because it's in an uptrend, where do you think the best places to buy would actually be? Well, they would be at this point here, and this point here, as the correction turns into the next impulse. So why would they be the best places to buy from? Well, because you're going to get all of this impulse move here. The earlier you can get into the impulse, the more profit you can make. Amateur traders get it slightly wrong. You know, what they'll do is they'll see this big move and perhaps try and enter the trade up here, and then before they know it, the impulse has ended and it goes into the corrective phase and they get stopped out, and then it moves to the next impulse. So, and that's called fear of missing out. You've probably heard the expression FMO. So we're looking as traders to identify where the correction ends and the next impulse begins and try and get into a trade as early as we can there. So the opposite of an uptrend is a downtrend, and that's defined as when price makes lower highs and lower lows. So we can see the highs getting lower each time and the lows getting lower. Again, the movement in line with the trend is called the impulse, and against the trend is called the correction. So if we were a trend trader this time, we would be looking to sell the market. Where would we be looking to sell from? Ideally, looking to sell from here, here, and here, where that correction again turns into the next impulse, where those buyers turn into sellers in line with the bigger trend. If we can identify those areas, we stand a chance of taking profit from all of this impulse move. So let's take a look at some examples. Let's take a look at a downtrend first. It's quite evident, isn't it, that price is moving down on average there. What might not be so evident is the impulses and corrections though, because nothing is picture perfect in trading, unfortunately. That's why I've deliberately picked something which might not be so easy to see those cycles of the impulse and correction. But I've drawn them in for you. Okay, so hopefully that makes it a little bit easier. We can see the highs getting lower and the lows also getting lower. So that is the definition of a downtrend. Let's take a look at an uptrend. Again, you can clearly see that it's moving up on average. What might not be so obvious is the impulses and corrections, but I've drawn them in for you. And we can see we're making higher highs as price moves to the upside and higher lows. So that was your Back to Basics lesson on trends. Look out for these videos. They're coming out every Tuesday. Put a comment in the comment section if there's something particular you want us to cover, and we will look to do that for you in future videos. But for now, it's a goodbye from me, Nolan, and a goodbye from the Trade and Train team, and we'll see you soon. Bye for now.